What's up, everyone? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the overall market moving forward, as we have very important news coming out involving the Fed, not to mention the whole situation in the Middle East. I'm also going to break down what's going on with news affecting the markets for tomorrow. But let me just mention that I am not a financial planner. Make sure you take nothing I say as financial advice. And also, if you guys can, please smash the like button. It not only benefits me, it benefits the entire community as a whole. Anyways, the market's in a very, very interesting position. We had some bad news that came out over the weekend. Basically, in Japan, inflation was higher than expected, so their banks have ended up raising rates. As a result of doing so, this led to a very, very big shift in the American markets as well, because first off, Japan dragged things down. We saw the Japanese market just take a big hit. That's important for the US markets, not to mention the fact that Americans are the ones who are borrowing a lot of money. And this shift in interest rates is going to affect their investments to a large extent, leading to like more margin calls because of the shifts in the dollar and the Japanese yen, and also because of the fact that there's a lot more fears emerging as a result of all of this. So the problem is there's a lot of weakness that's going on in the global economy. If you look at like the European Union, what's been happening with them being forced to be into positions where they have to start cutting. Same thing with the Canadian central banks, and now we're seeing the U.S. in a very, very similar place. So there's fear that was building up over the last couple of trading days. Going into last week on Thursday, the manufacturing numbers were very weak. I remember looking at them and we were very, very interested in what this would lead to. That's what started this market dump. And then the market dumped even harder after the unemployment numbers came out. So all this bad news has been coming out about the recession, the US struggling and all these different things. And this has led to a big shift in the way the market's viewing things. I want to talk about what that is. So we have this man known as Jeremy Siegel, who's come out and he is saying that the Fed needs to make an emergency rate cut. And this is becoming the new norm right now. He said that the Fed funds rate needs to be between 3.5 and 4%. He's saying that the Fed has to once again shift very, very quickly, or else there's a lot more damage that could be done. We have to be very, very careful with all of this. So, why is this very important? What's going on with this? Siegel is known for being a professor at the University of Pennsylvania's Wharton School, and he's saying that the Fed needs to act quickly, or else things could get ugly. And that's the most important thing, because when you think of excuse me, when you think about it, the Fed, they basically are making moves that have delayed effects. So they have to cut because of the fact that if they start cutting once the data shows it, the data is already delayed. Okay, the CPI report, the PCE report, all this data is delayed. It's old data that they're reacting to. And that's why their methods seem to be very criticized by big investors, by economists all over the world. So I would say that it doesn't make sense for the Fed to do what they're doing. I know that Jerome Powell keeps saying they want to be careful, but the Fed is now being inclined to do an emergency meeting and give us a cut. To what extent? The market is starting to price in a 50 basis point cut. The market wants to see the Fed give us at least 50 basis points worth of cuts by September 18th. That's what the market is thinking now. Now, let me make this clear. If we don't hear anything from the Fed tomorrow, the market is starting to push over this news, over the anticipation of a possible rate cut that's coming, an emergency rate cut. Okay. So if the Fed doesn't say anything tomorrow, the market will most likely run and try to fill this gap. There's going to be some excitement about this, right? The market's going to look for a little bit of a shift because of that. But at the same time, if the Fed says, hey, we're not going to be doing this emergency meeting, there's no cut coming, the market's going to get rug pulled and SPY is going to see another big drop. So keep that in mind. The Fed is affecting whether or not we continue to run or not. That's a very, very big factor. But as of right now, the Fed has not said anything. So I presume they might not say anything tomorrow. And that could give the market some hope for a bounce. Now, there's also going to be a lot of things going on involving the Middle East. Tensions are continuing to rise, and we're starting to see, President Joe Biden and Vice President Kamala Harris meeting up with many different leaders to have these security talks. Now, this is huge news. This could affect the markets as well to some extent. So long as we don't get a very negative reaction tomorrow to all the news that comes out, as long as that doesn't happen, the market could still attempt to bounce. So we'll see if that ends up being the case. But that's going to be another factor that's worth mentioning. We'll see how things end up going for this. We'll see. As of right now, there hasn't been any attack at the time of recording this. So I hope that it doesn't happen. I hope that things are just very minor and as many people end up surviving as possible. On top of this, when it comes to other pieces of news, tomorrow is going to be Tuesday, August 6th, 2024. Please note that we have exports and imports data in the morning, which is very minor. We have the Economic Optimism Index report coming out at 10:10 a.m. Very unusual timing, but honestly, it might not cause anything that significant. I think the market's more concerned about the Fed right now. So there's not really much data coming out. It's the first time in the last 3 trading days we didn't really get much data. Part of why the market held up a little bit better towards the end of the day. So we gapped down basically, but then we started to get bought back up. It's because the services data was decent today. So we got some decent data. Services was okay. Services prices were a little bit high, but everything else was fine. So PMI, business activity, and employment were fine. That's why the market held up. If that data was bad, we would have seen another big drop. But so far, the market's holding up. And there's not really much data coming out for tomorrow. Then I just want to mention that we have some earnings. Don't forget Berkshire Hathaway reduced their Apple position and they are holding a lot of cash, which they're most likely using to start buying these dips right now. And then Palantir is also announcing their earnings and they're doing really well. They have very, very strong revenue forecasts for both the next quarter, not to mention the entire year. And that's good news for them. So if you actually look at this, the company is basically expecting annual revenue between 2.74 billion to 2.75 billion, which is above what we were expecting earlier at the 2.69 billion mark. That's also above the estimate. And then we also have the Q3 revenue coming out between an estimated 697 million to 701 million. That's above what expectations are. So good news for them. That's why the share price is up. Strong guidance and decent earnings. Good for them. Anyways, let's talk about the charts. So honestly, guys, it's hard for me to kind of give you guys an accurate prediction with all these different factors stepping in, but I can tell you this. It depends on the level. And keep that in the back of your mind. The market's running based off levels, and I think that's the best way to go about trading and such. So why do I say that, predicting this is kind of tricky? Because it depends on so many factors in the Middle East, factors depending on what the Fed announces. I can't predict everything perfectly, but I'll try my best to give you guys a good analysis anyways. So we're testing this 20 EMA. Remember I called this out in the morning. 522 on SPY is currently where it's at. If we break that tomorrow and we hold above that, there might be an attempt to fill this gap. As long as we don't get any bad news, we could fill this gap and start pushing all the way up to almost 530. It's very, very possible, at least towards this support around the 527 area. So 527 to about 530 is likely coming if we do manage to break past 522. But there's a big but. If we get bad news and the Fed comes out and says, hey, we're not going to do a rate cut. Nope, we're going to have to wait and see on the data. No emergency rate cut, right? If that happens, I'll be looking at 515 again. Lose that, and there's going to be a rug pull coming, and SPY is going to tank, right? All the way down to 510, 505, 503, low levels like that. So we have to see what does the Fed say. We have to see what kind of reaction we get the Middle East. From a technical standpoint, this chart kind of favors a cup and handle like structure and a bullish wedge that's kind of forming. So this favors the gap fill. It favors like it wants to push into at least 527. We also have the high from the pre-market at 525. So 525, 527, 530, those are 3 resistance levels. We favor a push up there if we break 522. That looks more favorable looking at this chart, in my opinion. That's my unbiased opinion. For ES, we're looking more bullish as well. We have a nice inverse head and shoulders like structure that's developing. We're also above our 20 EMA, the resistance that held us down all day. In fact, this held us down for multiple days. So I think this is a potential breakout attempt. Just notes, okay, if we get bad news from the Fed, they say, hey, we're not going to cut rates, we could be dipping back down, but just make sure we watch this 5,200 area. If we hold, or if we lose that, we will turn back down. If we hold above our 20 EMA, this thing is going to try to push up towards the resistance at 52.78. If that breaks, look out for the top. We're going to the 5,300s most likely. So I think what's looking more favorable is the upside. We look like we want to push a little bit tomorrow. This chart looks like it's going to try to get close to 5,300 tomorrow, in my opinion. That looks more favorable, but don't forget there's so many factors affecting us. We'll see, but just know that that looks more likely, in my opinion. SPX is not looking as good, but I do like the fact that this is possibly a low coming up and making a higher low. If we manage to break past 52.25, we're going to be testing this high all over again at 52.50. Break that, and we're going to be testing our 20 EMA in the 5,300 area. If we're bearish, you want to see it basically lose 51.25. If we lose that, we're going to turn back down. This is favoring a little bit of a push looking at ES and the others. So I think it might try to push up to at least 52.50, but we'll see just to be safe. Okay, so once again, guys, the charts look more bullish, a little bit more bullish to me. But there's a big but. That's based off the anticipation of the Fed giving us an emergency cut, which is not guaranteed. And if the Fed comes out and says something different, things could shift. As of right now, the charts favor upside, so that's what I'm going to go with for the time being. For now, Nvidia looks more bullish. We managed to break our 20 EMA in the after hours. That's a good sign. We held above that for 3 hours. That's a good sign. If we hypothetically lose 101, look for 100. If that breaks, we're going back down to 97.5, then lower levels like 93. If we're bullish, you want to see this kind of breakouts towards our 50 EMA, towards 105. If that breaks, we're going all the way up towards the 108 area. We look more bullish, trying to break out and fill this gap, so I favor upside on Nvidia, and we're looking pretty good in my personal opinion. This chart is favoring upside. Hopefully, we don't lose 95, and I think that there's a good chance we fill the gap above. So I think that Nvidia is looking more bullish in my opinion. That looks more favorable to me. For Bitcoin, Bitcoin has a nice double bottom like structure. If we're bullish, there's a wedge that's forming. This is favoring a push for 56,230. It looks more favorable to me. And if that breaks, we're going all the way up to about 58,000. If we're bearish, you want to see it lose 52,600, we'll be dipping back down if that's the case. This chart's favoring at least 56,000, in my opinion, from a technical standpoint. How about Tesla? Tesla's holding up decently, have a nice gap to fill. It's very simple. If the Fed says, hey, we're not going to do a cut, look at 196 on Tesla. If we lose that, I think we could be dipping all the way down to the lower 190s. If the Fed does not say anything, and as long as we push amidst the hype that the Fed is going to cut, do an emergency cut, we have this gap to fill all the way up to about 207.5, taking us into at least 208, then 212. What do I think is more probable? I think we're going to most likely fill the gap above. Most likely the gap is going to get filled above, so I favor the upside. For other stocks out there, we have NQ. NQ has a nice double bottom like structure. We have our 50 EMA at this 18,320 area. So hypothetically, if we were to lose 18,000, I'd be looking at the support over here. I think we're going to likely turn back down if that ends up being the case. We have imbalances to fill down here. However, if we're bullish, as long as we hold above where we currently are, I'd be looking for resistance at 18,325. Breakdown, we're going to fill this gap all the way up to about 18,500. This chart has a double bottom. It's favoring upside. It looks like a nice accumulation. This favors a push to the upside, in my personal opinion. It looks more favorable. This is going to push higher. But just to be safe, don't forget, depends on the Fed and etc. Same thing with the QQQ. QQQ is favoring upside, but make sure you watch this level right here. We have this 442 area. If we break this, I think the QQQ is going to go up to about 447.5. If we reject and we end up losing 433, we could be looking for a move back down to the imbalance at 424. So it's tricky. Depends on the Fed, depends on the Middle East, but the chart is favoring the upside. It looks like it wants to push higher. It's the higher 440s. That looks like what the QQQ is going to be doing. Now, what about for Apple? How is Apple stock looking? In my personal opinion, I think that this is favoring the upside. If we manage to break above the 212 area, I'd basically be looking for an attempt to get up to about 214. That's going to be our 50 EMA. Break that, I think this gap fills all the way up to about just under 220. If we're bearish, you want to see it basically lose 207 and then 204, and then there's going to be a big drop into the 190s. With the bullish wedge that's forming, Apple is favoring the upside. It looks like it wants to push to at least 215. It looks like it's favoring that. We'll see what the data tells us. We'll see what happens with all this news from the Fed. So just be very mindful of that. Now, I'm going to be a little bit quicker for this. Palantir tried to bounce. It's actually bouncing right now thanks to earnings. Watch 26.44. We'll see if that holds. If it holds, it could continue higher. If it loses that, it might be dipping back down to 25 and then bounce. But overall, it's more bullish. It's going to make a higher low eventually at one of these levels, whether it's 26.38 or 25. But it should bounce and still looks more bullish. We got a huge dump on Supermicro, but notice that it's trying to rebound. Look at 630's resistance. If we break that, we could fill the gap towards 660. If we lose 609, we're going to be looking for a dip back down towards 580. This chart is favoring upside, in my personal opinion. For Rivian, the chart is favoring upside. I have a nice inverse head and shoulders like structure. If it holds above 14.94, we're going all the way up towards the 15.5 area. If we lose 14.6, we'll be dipping, but this chart is favoring the upside. SoFi is looking more bullish as well. it looks like it's going to test 6.79 tomorrow. If that breaks, we go higher. If we lose support over here at 6.5, we're going to be dipping, but this chart once again favors the upside. Don't forget, it depends on Powell. I want to make that as clear and understandable as possible. For the IWM, we might be trying to fill this gap towards 208. If we are bearish, we want to see this thing basically lose 201 and start dipping. But I favor upside, and I favor this gap fill from a technical standpoint. AMD is looking pretty decent. Got a nice inverse head and shoulders like structure. I think this imbalance is going to attract it. As long as we hold above 138, we're easily going up to about 142. So we favor the upside. If we're bearish and 134 breaks, we will turn back down, but this still favors upside. For ARM is also favoring the upside. Make sure you look at resistance around 116. I want to see it try to test that, if not break that, to turn back up. If we end up losing support all the way down here at 108, we'll be dipping, but I favor the upside. ARM is looking more bullish to me. For Coinbase has 192.75 to watch. If it breaks this, we're going up to this gap fill towards 202. If it rejects, watch 185 will be dipping. If we lose that, it's still shuffling right now, but it looks like it wants to fill that gap. It looks like it really wants to, so it favors that. Same thing with Amazon. Amazon has 162.63 as resistance. If that breaks, we'll be bouncing back up to 167. If this rejects, we'll be dipping back down towards 157. Watch and see. We do favor upside. If we break 162, that's going to be your confirmation. So we'll just have to wait and see. For Meta, if we break past 480, look for that gap fill towards 486. If we lose 476, we'll be dipping back down towards 471. We still favor the upside. Microsoft is favoring upside. If we break past 402, I think our next target is going to be up here around 407. Well, technically we have 405 and then 407, but still more bullish. If we lose 400, I'd be looking for 394. If that breaks, we dip, but this favors upside in my personal opinion. So that's looking more bullish to me. Google is also looking okay. Not as great, though. Not as great as Microsoft and the others. We're still quite a distance away from 163.5. We got to break that to try to bounce. Otherwise, we're still kind of lackluster. We're still kind of range bound. So that's what I'm kind of seeing for Google. Not looking as strong unless we break 163. GameStop looks more bullish. If we break past 21, we're easily going up to about 22.5. AMC looks like it's going to try to go back up to about 5.09. If that breaks, we turn back up. So it's holding up decently. DJT took a big hit amidst all the news, but I want to see if it could test 27.62. If that breaks, I think the imbalance will take it up to 28 at least. So there's some upside potential. If we get bad news, 26.5 is coming, then we'll dip. The VIX dipped quite a bit. Now it's trying to rebound, but like I said before, we'll see if this move lasts or not. It is possible it dips a little bit more because generally when the VIX spikes, it does dip a little bit. So we'll see. I'm going to be very patient depending on lots of news for tomorrow. The 10 years still dipping because the market's anticipating a cut is coming. That's why it's dipping. And the dollar is down because of the Japanese yen, what kind of reaction we're getting. So we'll see how that goes as well. So with that being said, okay, the markets are looking like they want to bounce from a technical standpoint. I'm not promising it's going to happen. It depends on so many different factors. It depends on what Jerome Powell and the Fed end up saying. It depends on what's going on in the Middle East as well. But just know we're looking more and more like we want to bounce. That's what it's looking like. It looks like the market might be a little optimistic when it comes to the Fed, potentially giving us a rate cut. The market loves to do that. So we'll see if them pricing in the rate cut makes sense. We'll see if they're right or wrong. So be patient, do what you have to do, guys. And I'll see you guys very soon on the next one. Thank you for listening. I'll see you guys tomorrow before the market opens, and peace out.